Warren Buffett is one of the most successful investors of all time, with a net worth exceeding $100 billion. But what sets him apart isn't just how much money he's made, it's how he manages, grows, and protects his wealth. Buffett follows a simple yet powerful philosophy when it comes to money management, and today we'll break down his 5 golden rules that you can apply to your own financial journey. If you want to build lasting wealth, you don't need to be a stock market genius. You just need to follow proven principles that work over time. Let's get started. First rule, never lose money. Buffett's most famous quote is, rule number 1, never lose money. Rule number 2, never forget rule number 1. Sounds simple, right? But it goes deeper than that. Losing money doesn't just mean making bad investments. It means making emotional financial decisions that put your future at risk. What most people do, invest in things they don't understand. Follow hype trends without research. Sell in panic when markets drop instead of staying patient. What Buffett does, invests in companies and assets that he deeply understands. Focuses on long-term stability over short-term gains. Only buys when an investment is undervalued and has strong fundamentals. Lesson: before investing your money, ask yourself, do I fully understand this investment? Am I thinking long-term or just chasing quick profits? What's my risk if things don't go as planned? Wealth isn't built overnight. It's built by avoiding bad financial decisions. Second rule, use the power of compound interest. Buffett credits much of his wealth to compound interest. He calls it the 8th wonder of the world. What is compound interest? It's when your money earns money, and then that money also earns money. Over time, this creates exponential growth. Example: if you invest $10,000 at an average 10% return per year, after 30 years, you'll have $174,494 without adding any extra money. What Buffett does, reinvests profits instead of spending them. Starts investing early and never stops. Holds on to great investments for decades, letting time do the work. Key takeaway: the earlier you start investing, the more money you'll have in the long run. Time is your biggest asset. Use it wisely. Third rule, avoid unnecessary expenses. Despite being a billionaire, Buffett still lives in the same modest house he bought in 1958. He doesn't own luxury cars, wear expensive designer clothes, or waste money on things he doesn't need. What most people do, spend money as soon as they earn it, upgrade their lifestyle every time they get a raise, buy expensive things to impress others. Buffett's approach sees every unnecessary expense as lost investment potential, spends only on things that add real value to his life, focuses on financial security, not showing off wealth. Before making a purchase, ask yourself, do I really need this, or is it just an impulse buy? Will this bring me long-term value? What if I invested this money instead? Building wealth is not just about making money, it's about keeping it. Fourth rule, create multiple streams of income. Buffett warns, if your only source of income is your salary, you are one step away from financial disaster. Most people rely on just one income stream. But what happens if that job disappears? They have no backup plan. What Buffett does, owns multiple businesses, Berkshire Hathaway, See's Candies, Geeko, and etc. Earns dividends from stocks that pay him every year, has real estate investments and other passive income sources. How you can do it? Start a side hustle, freelancing, coaching, selling products online. Invest in stocks that pay dividends, passive income. Buy rental properties for consistent cash flow. Monetize a skill through digital products or online courses. One income source equals financial risk. Multiple income sources equals financial security. Fifth rule, stay calm in market crashes. Buffett's golden rule for investing: be fearful when others are greedy and greedy when others are fearful. Most investors panic when the market crashes. They sell their investments at a loss. Buffett does the opposite. Example: during the 2008 financial crisis, stocks crashed and investors panicked. Buffett bought stocks at low prices while everyone else was selling. When the market recovered, he made billions. How to apply this rule? Don't panic sell when the market drops. See downturns as buying opportunities. Think long-term. The market always recovers over time. Ask yourself, am I making a decision based on fear or logic? Is this a short-term problem, or does my investment still have long-term value? What would Warren Buffett do? The wealthiest investors stay calm and invest strategically when markets fluctuate. Warren Buffett became one of the richest people in the world by following these 5 golden rules. Never lose money. Avoid bad financial decisions. Use compound interest. Start investing early. Avoid unnecessary expenses. Spend wisely and focus on financial security. Create multiple income streams. Don't rely on just one paycheck. Stay calm in market crashes. Think long-term and use downturns as opportunities. The good news? You don't need millions to start applying these principles. What's the first rule you'll start following today? Let's discuss in the comments.